So let's talk about a couple of your big holdings. Yeah. Alibaba had an incredible IPO a few years ago, then sank. Folks said, hey, it's not the be all and end all, but now has recently charged to new highs. Tell us that story, and what does it mean particularly for US stocks as well?
Well, the story is that China is a big consumer market, and the retail space hasn't developed to the extent it is in the United States. So Alibaba is actually leapfrogging a lot of the brick and mortar retailers that are in China. And the reality of it is that there's not a lot of competition there. So Alibaba, is very well positioned, given the fact that it dominates its marketplace. And you've seen a gradual, very quick acceptance of e-commerce in China, particularly given they don't have the legacy of the brick and mortar retailers. And Alibaba has just managed to execute very, very well, not only in B2B, but also in C2C. They have a kind of a Tmall, which is a mall-type platform, which has been very successful in China.
And Alibaba now has almost a $400 billion market cap. Yeah. It is in the same ballpark as Amazon, Facebook, these other tech giants in the US that have come in. As you look forward, does most of Alibaba's growth come from just China, or is the assumption that they will, in fact, go to India and come to the United States and Europe?
Yeah, well, they're looking all over. They're looking in other markets, but the reality of it is that given the low penetration in China and the profit margins that they're earning in China right now, their profit margins are much higher than their global peer group, and they generate a lot of free cash flow. So the stock is in the 20s in terms of a PE on consensus earnings, which is a lot cheaper than the tech alternatives you find elsewhere in the world. And the reason being is that it is a very profitable company that's generating a lot of free cash flow.
And are there any US companies that are starting to make inroads into territory that Alibaba would otherwise have?
Not necessarily in China. Amazon has been very successful. Like, I live in the UK. Amazon has been immensely successful in the UK, and it would be hard for me to find Alibaba being immensely successful there. Alibaba is focusing a lot on emerging markets. They're doing a little bit in the US. The reality of it is that Alibaba knows its strengths. Its strengths are operating in markets where the fulfillment infrastructure isn't as robust, and where the supply chains are quite antiquated, and that's where they come in and take advantage of that expertise vis-a-vis their competition.
And given the resources they have, market cap, cash, would we ever see them come into the United States and make a major internet investment?
Perhaps. I mean, that's something that, clearly they will do it if they see the opportunity, or they see something that has not been disrupted. That's something that one of the US companies hasn't picked over yet.
But it's not a big part of their story that they will successfully...
It's certainly not the reason I own Alibaba. I own Alibaba for the China story and the potentiality of some other emerging market. But the reality of it is the low penetration of e-commerce in China and the growth in the GMV we're seeing in China, it presents plenty of opportunity for Alibaba to succeed. The most powerful thing about the model is not only do they work with the merchants, they also help them save costs because they have a B2B platform, so they help them on their inputs. And then on top of that, they help them finance because they have a financial subsidiary as well, so they help them with working capital and things like that. So they're really tied in with the merchant, and the barriers to entry go up as they provide more services to their merchants.